As we discussed at the top of the show, China is making some changes in how its grain is priced. American ag focuses a lot on that Asian market, which has been making huge purchases the past several years. But China's economy is not bulletproof, as we'll hear from Al Pell in this morning's analysis.
Our guest here at the Agribusiness Desk is Brian Basting from Advanced Trading. Let's talk about China a little bit, because China has been a very, very strong market for a lot of our agricultural products. Our country is also pretty strong in terms of buying the things that they produce. So it's a kind of a good trade system, but our agriculture departments, farmers depend a lot on China. How important is it really?
It's really important, particularly today, Al, in the soybean market. Tremendous amount of beans being sold and shipped as we speak to China, unprecedented amounts. They're actually coming in and buying some U.S. corn too this fall. So not near the level on beans, but they are seeing that those purchases start on corn. What we're encouraging producers to think about is the bean prices are high right now. Part of that is due to China. If the producer is looking at selling those beans, $13 beans for example, let's get a call option in place. Buy a cheap out of the money call option in case China continues to buy U.S. beans and or South America has growing problems this winter.
Well, sometimes China will buy the beans and then they'll go ahead and cancel the orders. They used to do that sometimes, and of course that affects the price. And what you're saying is once you get that price locked in, you got it locked in. Is that it?
You bet. I think once you get that price locked in, either via forward sale or some type of put option, whatever the case may be, you've got a floor underneath that. If something like you just described happens, China cancels some sales and the market falls apart, that's okay because you already got your floor in place. The important thing is to have flexibility, and the only way you get flexibility is to be in the market with a floor in place, either via sale and a call option or some type of put option underneath the market.
Is there anything else we need to be concerned about China, because they produce a lot of hogs, but that's why they need beans?
Yeah, there's always wild cards out there we never see coming out. You know, right now we're looking at a very strong economy in China. That's driving their protein consumption. Right. Their consumers have a lot of money in their pockets. They're buying a lot of soybeans to grind into meal, obviously, and feed to their hogs and poultry. China's economy is not bulletproof. I can't sit here today and say something's going to happen, but as producers, we always got to be wary about wild cards, left hooks, however you want to describe it, things that could derail the market.
Okay, thank you very much, Brian Basting, our guest here on Ag Day. Back with more in a moment.
To talk with Brian one-on-one, call Advanced Trading at 800-664-2314 or head online to advanced-trading.com. Ag Day, brought to you by Ag Explore. Nurse your soil back to health with the right prescription of Endzone and Prevent.